what is some of the best investing advice that you've gotten, or one of the principles that you operate by? Because you already touched on, be fearful when others are not, and be fearless when others are fearful, right? So anyone want to touch on the best investing advice or principle that you operate by?
I still go with the mom test, and it's I don't know who told me that one, but it wasn't my idea. And if anyone knows who it was, I think it's somebody who's a very strong investor, well known. But I bring anything that's new in front of my mom, especially something that is being pitched to me, and if she can understand it at 79 years old, and she's a very smart woman, but she's still 79, but she's still a mom. It, it it's served me right, and particular things again that are out of my comfort zone. In fact, something today was pitched to me, and here at this conference, and I called my mom up afterwards, and I said, here's the 1 minute kind of pitch, and she actually understood it. So that validation, I think, is really important. I mean, you could have a friend, you could have a mom, you could have a dad, but I find having a sounding board that if again, so much of this is brought to us, and it's in a deck, and it's long, and I just feel like the things that are easiest to understand, that are uncomplicated, are the ones that have done the best for myself. And even when it's out of my comfort zone, even when it's not real estate, have succeeded. And I think that's, again, the numbers might work really well. It might be very compelling, but the thesis, what the business is, should be able to be explained within a minute. If it is more than that, then again, when I've gone against that, I've failed.
Yeah, that's why we teach here in the Family Office Club about having a powerful one-liner. And simplicity is the best level of luxury. Anyone want to add to the best investing principle or advice that you've gotten?
The best one is, I always like to ask founders, what was the downside and how to get out of it with profit to yourself first. Did it bring you value as a happiness? That's the main. If it just, you can be successful, but you will be so unhappy that cash doesn't bring you value. If founders doesn't answer these questions for me, I say, okay, I'm out.
That's good. Bill?
I guess my point of view might be a little different. I have a big twitch factor. And if anybody knows anything about money, managing money, twitch factor is when you start to feel uneasy about the markets. You have the best of all businesses, real estate, because it's pretty steady. You can box your situation. But I can tell you, prior to this year, the previous 2 years, I had raised a lot of cash and was sitting painfully on the sideline, underperforming. And at times you have to do that to protect yourself and your clients. But boy, does it suck when you have to go in and do your family meetings. What didn't make sense to me was that for 9 quarters in a row, we had contracting cash flow in businesses, but the market was running through the roof. And then about 17 months ago, I read 2 articles that were very small articles when I tracked down. And we all now know, and I'm not political. I'm a money manager. I'm straight down the middle. I don't care about anything except making money from my clients. But I was able to identify that approximately more than $30 billion of Build Back Better was going to housing our new Americans and all the food and costs there. Well, we've now seen Doge, but at first people didn't really understand that. And so it didn't make sense at that time. So for all investors, whether you're about to go in or whether you're in and you need to rebalance, a twitch factor is a really good check. And if you don't have a twitch factor, you need to find a sounding board and start to understand what is going on. So those things don't happen very often. And certainly the markets ran like heck and we all benefited. We've never had 2 years like that. And thank God we did. It was great. I kept my clients invested. But it's that time where you start figuring out whether it's your own family office or your own personal money. Is everything static? Is this okay? Do we keep going? And that's sort of the, be fearful type of situation. So it isn't so much about an investment, because you all can sidebar with me and I'll tell you what's really undervalued right now or what you should be out of on any given day. I get paid and I do that for a living and have for a long time. but also, you all would call following your heart, right? Everybody on the panel would go, hey, we're not up here because we're dumb. We're also up here because we sort of have that twitch factor as well.
That makes a lot of sense. And, following with purpose, and then also just understanding what you know. Jack?
The best investment advice I ever received was don't try to be an expert in everything. We all, as investors, we have a niche that we focus on. It could be a broad niche, it could be a narrow niche, but we just can't know every industry. We can't be familiar with every industry. We can hire outside consultants, but the more narrowly we focus, the more successful we're likely to be. As our family office, we're not going to invest in a food manufacturing business, for example. We don't know the industry. We have no expertise in that space. We focus on the space that we know, that we already have connections in, that we already have expertise in. And as a result of that focus, we've been very successful in the past.
Send those deals to me. I buy them.
Good deal.
Yeah. And I just wanted to open up the room for questions. Do we have any questions? Oh, we got one right over here. Just wait till the mic gets to you. If you could just say your name and if you're directing the question to someone. Thank you.
Hi, I'm Eric Runge, and Bill, my question is for you.
Hi, Eric.
Hello, nice to meet you.
Aloha.
You had said that family offices hate managed money. Curious, so 2 questions. Curious what you meant by that. Second question related is if somebody operated a downside protected Bitcoin SMA, charged a money management fee, is something like that type of structure an automatic turnoff?
Okay, so the first question was, say again, please.
You said that family offices
don't like managed money.
Yes.
Yeah, they, probably about, family offices hired people like us for a long time. About 7 years ago, they found they could get better returns in the private equity space and migrated away from 60-40 stocks to bonds with a few alts sprinkled in there. Post to 2008 and 2020, it increased. And so there's things that they have to do in managing money. CLATs, charitable lead annuity trust, GRATs, grantor retained annuity trust for wealth transfer or philanthropy. And of course, I manage a lot of foundations and endowments, and they have to be, fully invested at all times. So they migrated to real estate, private equity, venture capital, and businesses. And typically for the last 5 to 7 years, if they couldn't kick it, they didn't want it. And so my role is a little bit higher end role, which is a sounding board to come in and look across the board. What have you got as an estate? And by the way, what have you got in particular areas? And whether it's on my platform or not, I shoot straight and try and help them find the right direction for what they're doing. Now, in terms of individual asset classes like Bitcoin, I've studied it for years, and most people don't know that we are not allowed on Wall Street to hold it or advise on it. The creation of the ETFs or investment vehicles now allows us to invest in that. In the case of Bitcoin, the trouble with Bitcoin is it still hasn't been clarified that in fact, and you heard today, there's 21 million, and it's a finite commodity. And technically, it should be regulated by the Chicago Mercantile Exchange. All others are actually a security and should be regulated by FINRA and the SEC. And I'm hoping that they will clear that up sometime soon. So in terms of application for Bitcoin, are you simply investing as a commodity or as a currency? Or what's the purpose of adding it to your portfolio of your estate? So I try and help understand and help clients understand, what are you doing when you're speculating or investing? What is the difference? In the case of this particular asset class that you're talking about, anytime there's a new asset class, I like to come in and take a look at it. And generally speaking, if it's a high volatility asset class with some kind of collar, I like that, right? I get paid to collar portfolios as a living, and I build things to manage risk. People ask me, what do I do? And I say I'm a money manager, but really I'm a risk manager is what I am. Whether it's in a large estate or it's a portfolio or it's a particular asset class I'm advising on. So I would need to know more about the thing that you're looking at, and I'd be happy to work with you to identify whether this is good or bad. And I offer that to anybody in the room. By the way, I have no minimum. My minimum for 25 years has been that the client is nice. because life is too short to work for knuckleheads. And I've worked for a lot of awful rich people, as in awful, rich people, and I tend to get rid of them.
That minimum is actually difficult for some people to achieve, believe it or not.
Yeah. Can we get a round of applause for the panel? If you do have any questions, they'll stick around for the cocktails. And we have Richard Wilson coming up now for closing remarks. Thank you again.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.